So what's the money market saying?
Now, we've only got one 25 basis point rate cut priced in by the end of the year now, one and a bit. But let's call it, you were talking about in whole 25 point increments. There's only one rate cut by December and another one in the first half of 2025. So we've only got two rate cuts priced into the market. There's a sort of a residual of like 10 basis points or something. But a few months ago we had four. Then it got three. Now it's two.
I heard the chief economist from Westpac, the new guy, talking the other day, and it was miserable. His conversation, it would sound like we're going to hell in a basket.
Really?
Like economically. So
Yes.
So I don't know whether Westpac's changed their view on the number of rate reductions, but they were very aggressive.
I think they had six.
Yeah, seven.
Seven by the end of 2025.
Yep.
I confess I haven't seen their latest. They're probably going to wait for something to put out.
Yeah, they haven't put anything out, but I actually heard him being interviewed. It was pretty dismal.
Pretty grim. I know CBA still have six cuts priced in by the factored into their modelling.
Over the next
year and a half, year and three quarters,
Yep.
yes. So there's still every bank still got rate cuts, but
Push
like
that
the market,
further.
they're pushing them further back for
Yep.
the first one and taking one or two of them out. So instead of six, it might be five. Instead of five, it might be four. So the rates, no one that I'm aware of is calling a rate hike. No one. All they're doing is saying on hold for longer.
But Kookie, I don't know if this is our mortgage holders and borrowers looking at this are going to be feeling great. I think it's because they're all hoping for a rate reduction in July, August, September, or something like that. Yeah. My gut feeling is that's right now on the data we have in front of us, subject to what we see in the next month.
Yep.
Things are getting pushed out.
Look, it still could happen. And as we've seen, this last month's been a change. If we're here in, I'll say 2 months, when we've got a couple more months of information and see whether there's one-off spike in commodities reverses and what's happening in the US reverses. We don't know. That's what the beauty of economics. You get a lot of shocking numbers. But it's not impossible to think that by, say, June, July, roughly 3 months from where we are now, we do have the unemployment rate at 4.2 or 3. That number turns out to be an absolute quirk. We do have the CPI at 2.8 or 9. It's not impossible. We do have the US weakening. We do have the European Central Bank and the Bank of Canada cutting interest rates. Maybe our friends in New Zealand will see the light and they'll start cutting interest rates. So we'll be part of that. It's not. I think that there's some possibility, and just as these rate cuts have been priced out, they can be priced back in pretty quickly with bad news. So like everyone else, I'm watching the Bureau of Statistics data coming through in the next month or so. And watching really closely for what does that unemployment rate tell us? What does that inflation number that we get on the 24th? That's actually probably the kingpin.
I think so.
24th of April. Have a look at 11:30 Sydney, Canberra time to see what's happening to that inflation rate. If we get a quarter-on-quarter reading of 0.6 or 0.7, maybe that rate cut will be brought forward a bit, but we need to see that number first.
And I think our listeners should just remember one thing that's really come about as a result of the RBA review, that full employment has become a much more important factor than we ever had in the past for the RBA to consider, or the new RBA, which they haven't got yet, but they haven't announced yet. But because employment has become a much bigger issue.
Mark, you're spot on. In fact, that's what Treasurer Jim Chalmers wanted when he revamped the RBA and the RBA board.
And I know no one's talking about it. By the way, that is quite a significant political policy change for the so-called independent board.
And for the moment, while unemployment's still relatively well behaved, it's not an issue.
Yeah.
The problem or the issue, the tension might occur if we start getting unemployment, say, approaching 5%. Not impossible.
Yep.
And inflation's still at 3, so not quite at 2.5.
But all of a sudden,
and then what do? Do we start looking at that unemployment rate going towards 5? Do we cut rates then? And that's the tension. We don't know. It hasn't been tested
Is it
yet.
equal billing though? So, my reading of it is equal billing. So before it was all about inflation.
Yes.
A little bit of unemployment, but it's inflation. Now I think the emphasis is inflation plus unemployment. So if inflation's at 3 and not where we want it, but unemployment's at 5, we might have to cut rates.
Yes. I think you're spot on. That importance of employment, which is why the monthly labour market numbers, the one that's coming out on the 18th of April, and then on about the 17th of May, I think it is, for the next one, those couple of numbers are really important. They have a huge impact on RBA, whether they're going to cut or not, or when they're going to cut, and importantly, how much they might be cutting over the next 18 months or 2 years.
You know, I have to say, when I saw that come out, I thought to myself, the RBA is supposed to be independent, but one way of making them less independent is you change the mandate.
the criteria.
You change the criteria.
You're independent, but within this boundary.
I thought it was very clever. But by the way, I don't have a problem making sure that we have a good unemployment number anyway.
Indeed.
I don't really have a problem.
And in fact, you want to be fully employed. You want everybody who wants a job to have
and
a
by
job.
the way, I should be clear. We should be clear. It's not about unemployment. It's about full employment. So they talk about full employment.
Yes.
Now, full employment means we don't know what it means, but we do know what they want to do when it comes to unemployment, because they've already talked about that.
And 4.5% unemployment rate is their line in the sand.
It's their non-accelerating inflation rate of unemployment.
About 4.5. So if we get to 4.5 in the next 3 months, watch out.
Yeah.
Because they don't want it even at 4.75, let alone 5. So that's why that last monthly labour market number at 3.7, that hit the screens. My God, what the hell does that mean? I'm sure the Reserve Bank have discounted that as a statistical anomaly. These things happen every now and then.
They're the monthly returns too. Like it can't be accurate.
And a monthly number, it's just. And so this month's survey, which will be published next week,
it might overshoot the other way.
It could. We could get.
Which, by the way, equally, we should
discount. So if we get minus 100,000 jobs, okay, no. Look at an average. Look at a moving average of the monthly numbers to get the trend. The trend is your friend.
Yeah. Okay. Beauty. So what do you reckon? Next
RBA on hold. Yeah. The interesting thing about the last one, Michelle Bullock, the RBA governor, said she wouldn't rule anything in or out. She gave a press conference. A couple of the journos really went hard on her. What does it mean? You're going to cut, you're going to hike, you're going to cut. I'm not ruling anything in or out.
Great answer. In other words, I'm not committing.
Like us,
because she doesn't have
she'll
the
look at
data.
the data. The RBA, when those numbers come out, they'll be looking at the screens too, thinking great or bad or good. Yeah, just like you and me, mate. They'll read.
And that's that's a point I'd like to make. We all sit here and not about so much you and me, but the consumers. We sit there in awe of what the RBA is going to say. You, the consumers, if you look at the data, you know what you can pretty much work out what the RBA is going to do.
If I only had two indicators in my life, and the RBA only had two, it would be the unemployment rate and inflation. If you know what's happening to them, you're about 95% of the way to working out what the RBA is going to do.
Correct.
Full stop.
And so you, the consumer, if you listen to what Kookie just said, where to go and find that information, abs.com.au, the Australian Bureau of Statistics, no one gets the data before anyone else.
No.
Not including the Reserve Bank.
They don't. Apparently the Reserve Bank do not get the data. It's so sensitive.
The information is printed, and we can all see it at
11:30 and 1 second.
Yeah, correct. We can all see it. And now that we've told you, or Steve's told you, what the RBA is looking for, you can work out pretty quickly whether there's going to be a rate reduction or no change at all, and you can start to get a sense of where it's going to be perhaps later this year. Kookie, thanks very much. Awesome.
Thanks, Mark. Brilliant.